Welcome to Trading Sadhguru. In this video, we are going to discuss possible levels for the coming week. Okay, that is trading days from 27 to 31st of October 2025. Okay, so Monday to Friday. So let us start from the simple moving averages. Okay, before going for the levels, first let us analyze the action of Nifty on 1 day time frame. Okay, here you can see this is Muhurat Day trading session, the small red candle, and the very next day there was a huge gap up of 0.8%. Okay, and this was given up toward the end of trading session, this big red candle from the top. Okay, so the next day after trading session, more trading session, is the this swing peak. Okay, and today also we have seen a decent correction. Now it closed around 25,800 levels, so we could see that Nifty moved till 25,718 on intraday basis today. Okay, so simultaneously there are many things that are at play. One is the exponential movement of gold and crash in Bitcoin value, coupled with political uncertainty induced through tariffs as well as conflicts, military conflicts. Okay, so and there is one more important parameter that is very crucial for us to discuss: the role of AI. So what is happening is every now and then we are seeing we are reading news articles on social media and mainstream media that many jobs are being taken away. The existing manual jobs are being closed. So employees are getting removed, thousands of employees per company. We read such kind of articles in newspapers, television, as well as on social media. Okay. So all the things are at play at this moment. Okay. So considering all this, in our last week videos, we were expecting a top to be formed by Diwali. Diwali being a sentiment week, it was very positive. It rose all the way from here to the top. Okay. And the very next day, the peak was made and correction started. And today is the second trading day after that day. Okay. And you can see two decently big red candles. Okay. So this is in line with our last week analysis where we expected Nifty to correct post Diwali. Okay. After Diwali sentiment is over. Okay. So we continue to hold the same bias that for the coming week also the sentiment is going to be negative because of the reasons mentioned before. Okay. So from moving average perspective, where is this moving average? 25. This is 20 period moving average. The blue one is 20 period moving average. Yellow is 50 period. Purple is 100 period. Red is 200. The period is day here. So daily moving average. Simple moving averages. Okay. So this value is at 25,395, 25,145 yellow. Purple is 24,928. So this is also an important level to watch out on daily time frame. 24,928. Breach of which the 200-day moving average testing, it has already happened 3 times in the last 3 months. Okay, so it is going to be very interesting. The coming week, what a market does will define the long-term trend. Okay, so we can note down these values. These are moving averages. This is a view of the market from moving average perspective. Okay, let us use another lens. Okay, we will look at the Nifty from a different angle. So which angle should we go for? Okay, futures angle. Let us take futures angle. Okay, so this is the October futures chart of Nifty. The time frame is day. So what do you observe here? This is more or less similar to Nifty chart, but based on the expectation, there may be a premium or a discount. Okay, so this is the fixed volume profile, fixed range volume profile. So the most traded zone is point of control is 25,274 as at today. Okay. So if market is inclined to pull back, so the the level to which it may pull back is 25,274, because the big people, the institutional investors and foreign investors, they might be holding calendar spreads, so they just want to bring it back to the average value where the futures traded most. Okay, volume weighted average. So this is a good zone, 25 to 74. Roughly you can say 25,300. Okay. So note down this value, 25,274. This is from futures. And we'll take another angle to look at Nifty. So what it is going to be? Yeah, it's order blocks and regression channel. Okay. So till now we have seen daily time frame charts of Nifty and Nifty future. So here what we are looking at is Nifty index on a 1 hour time frame. Okay. So every candle represents 1 hour of trading. Okay. So if you look at the order blocks, let me adjust this a little bit. Okay. A little bit zoom out. Yeah, this was our previous low, September high. So 26,200 around, but we stopped out around 26,100 here this time. Okay. So let me zoom in. So we can say that after 26,200 and 100 level. So the zone is 26,200 to 26,100. That is the peak. Last year peak. It's very significant. And this year also, 2 days back, we tested to 26,100 level. So let us take this as a zone, resistance zone for the coming week. Okay. So we don't have any levels as targets on upside, but it may happen that market may open gap up, or due to intraday or short covering, it may shoot up. Okay. So till what level we can go? The previous swing high, that is 26,100. Okay. So we have expectations on the downside because our bias is on the downside. Okay. So this is nothing but Fibonacci retracements. 26,104 is the top. So 0.618 falls around 25,705. It is very close to today's closure. Today's closure is around 25,718. So 13 points away. So we already almost reached there. Okay. So also this moving average, 9 period and 21 period moving average are about to cross over on 1 hour time frame. Okay. If this happens and sustains, you may expect a big downward movement. Generally, whenever there is a correction, 0.618 is a golden ratio, is an important ratio. So this level is important. Okay. Sorry. After which you will get 0.5 retracement, that is around 25, 582. Okay. This is from Fibonacci retracement levels. Okay. And if you look at the regression trend, the channel here, so the middle value is somewhere around 25,400. So these are all important levels we can watch out for the coming week. Okay. So this is from the order blocks, moving average crossovers, as well as regression trend. Okay. And Fibonacci values, retracement values. Okay. Okay. Let us restrict our analysis. Otherwise, we'll get confused. Let us stop here. So one can note down all these values, which are all important levels. We'll write down all these levels at one place in the end. Okay. So our bias is going to be for the coming week for 27 to 31st October 2025. Okay. Our bias is going to be negative. So upside resistance is the swing high. So we'll keep this in mind, 26,100 level on upside. So we'll be looking at targets on the downside. So which are the levels, important levels that we discussed? So now market has closed around 25,800. So for immediate intraday purposes, for Monday, one can look out for 25,670, followed by 25,580. These are all 0.68 and 0.5 retracements of Fibonacci values. Okay. Breach of which 25,460, followed by 25,395. This is nothing but 20-day moving average. 25,145. This is 50. 24,928. This is 100 period motion. Okay. We are restricting our view to 25,145, out of which the most probable levels on the downside are 25,460. These are most probable. Okay. So futures point of view, the point of control is the POC value we discussed. What was that? 25,277. So not to be forgotten, you can insert one more level here, 25,277, or else because we are trading much above this value. So over a period of time, it will move upwards. So it will, the upward will be around, you can say that 350 or 395. This will take care of that value, the futures value. Okay. So our bias is negative and the levels on the downside are also given here. And let us see what will happen in the coming week, whether our analysis will be comparable to the actual Nifty movement or not. That is to be seen. And these levels and everything what we discussed is nothing is absolute. Okay, based on the technical analysis and experience, we are arriving at these levels, and these levels are not any recommendation for you to take trades. Okay, so everything mentioned in this video is only for educational purposes and is not an investment advice. Okay, so for any investment advice, you please consider talking to your consulting your investment advisor and do your own due diligence. Okay, so all these values, this discussion and analysis for educational purposes only. That's all for now. Protect your capital. Don't go aggressively if you are a small trader. Okay, always make your stop loss as your friend. Okay, else you go to option strategies where you know the maximum loss in that strategy beforehand. Okay, that's all for now. Take care. Bye bye.